Hey everybody, and welcome to the first video with the face camera. This is brought to you by Loom. No affiliation or sponsorship, but I thought I'd get an upgrade because my last screen recorder was pretty bad in my opinion. So let's get right into the video. First of all, link in the description for my Webull and Robinhood. If you don't have an account with them, you can get some free money with some free stocks. Definitely hold them over the long period. Yeah, you never know what you'll get. So, today's video is about Playboy, and if you haven't been watching, this stock has been on an absolute streak. In the past 5 days, it's gone up just about 60%, if not more. Just March 30th, you could have picked this stock up for 15 bucks, and it's already almost 28. And I'm going to give you my thoughts on what you should do with this stock at this position if you bought in at these low levels or even lower, and hopefully you will agree with me. If not, let me know your thoughts in the description or the comment section below. But I think you should take some profits. I know this is not a popular thought to have when a stock's going on a tear like this. A lot of people want to believe that it will keep going on forever and it's going to go to the moon. You know, it'll never come down. But the most common phrase in the stock market is, as the stock goes up, quicker and quicker, like the faster it goes up, it actually becomes more risky of an asset because there's no support levels, and people buy in at the top get hurt the most. So if you buy in at the top right here, you could get hurt with almost maybe 10 to 15% downside, as much as 20 to even 60, because that's where it was just 5 days ago. So if you are in this at lower levels, I do suggest that you take some profits. What does this mean? Don't sell out of your full position. I think that would be stupid because this company has years of growth ahead of it. It is just really starting to get on its feet again and really spread its wings. It has so much room to grow, but it has grown really quickly in a short period of time for the stock price. This has nothing to do with the company itself. The stock price has become overheated because of the $28 analyst price target, and that was just one analyst. So I wouldn't put too many of my eggs into one analyst's basket. So what does it mean to take some profits? You could take out your cost basis. So whatever you put into the stock, if you put in $1,000 and it has since gone up 60%, you sell $1,000 worth of the stock and you let the rest ride. And if there is a substantial dip and gets to an attractive level where you see a good return over the next year or two, or even a longer outlook in the next couple years, next 5 years, then buy back in by all means. But I think you can save yourself a lot of money just by selling out now. A lot of people may have a problem selling out now because of tax incentives. I know a lot of people almost will never sell a stock that they haven't held for at least a year, because if you don't, you get taxed at the maximum tax rate for your bracket. So if you buy a stock, say you're day trading or even just selling within a week or a couple months, you will be taxed at, I think it's upwards of 30% just on capital gains tax. Short-term capital gains tax is what it's called if you want to look it up. And I think it's 30%. So 30% of your profits will be taxed because you didn't hold the stock for over a year. This is basically the government incentivizing you to hold stocks for long periods of time so that they are able to do something with the money that you are investing into the company. Whoop. Go back here. And when you hold a stock for over a year, it is called long-term capital gains tax, and you will be taxed at a much lower rate than you would if you were holding it shorter than that. Now, in my thoughts on taxes and stocks, I would never buy or sell a stock based on tax incentives or reasons, just because I think you can make a lot more money focusing on just the fundamentals of companies and whether or not they are going to grow over the next coming years, with the obviously taking into account the overarching theme of the market. If we're going through a horrible bear market where the stock market is going down and down for a year, then obviously most stocks won't be performing very well. But over the next coming years, then if you keep buying in and keep buying the dip, then it will be even a more lucrative gain. So if you know me, you know I love market capitalizations. In my opinion, this isn't overvalued from a market capitalization yet. I would say anywhere under $1 billion, $1.5 billion is still a steal if you're looking at this for a multi-look outlook or multi-year outlook. If you're just looking to make a quick buck or for some short-term capital gains, as we just said, I would not suggest investing in this right now because I do foresee a dip and a good buying opportunity, maybe around the 25s if it does drop to the 22s from a stock price perspective. But anywhere under 1.5, $1 billion is pretty attractive to me still, just because the first thing that they said on their updated stock price or stock presentation was that they grew their global sales by $1 billion. It was $2 billion, the last presentation they put out just 2 months ago, and is up to $3 billion in global sales. So I don't see why the market capitalization would be anywhere short of that, because if they're selling this much product throughout the whole entire world, I think that the amount that the company's worth could be pretty similar to that. So where would I buy back in for a short-term buying opportunity? Like I said, when I was buying in, this was under $500 million. So it's almost doubled since then. I think I made a video when it was at about 12. So it has over doubled since then. The stock price was $12. We look here just at the beginning of March. So, and just under a month, the stock price has over doubled. Just reiterating the statement that this is growing quite rapidly, and to take some profits if you have bought in, just because, like I said, as stock prices go up, they become more risky of an asset because there's little and little support. The reason I wanted to make this video is because I have been putting out a lot of Playboy videos recently, and I don't want to be kind of pigeonholed into as the Playboy stock YouTuber. So this is kind of my last video for a little bit on the current situation. Unless things change drastically, I will not really have anything else to say about this stock. So hope you enjoyed. Please subscribe, like, and comment if you did, and have a good one.